Good evening, everyone. Once again, welcome to another edition of Strategic Financial Management. In today's class, we shall look at this question. We have analyzed the question in our previous lecture, right? But today we'll just go straight to the point by doing what? By solving it, by looking at the required. You can see that is why I usually say something in SFM or any other courses you want to write is that you need to understand the required. Ask yourself, what did they say I should do in this question? Look at this question now. I didn't even know where I picked it from. I've been looking for where I picked this question since when I came back from work. I've not really seen it. But the question says that calculate the nominal after-tax net present value of project E, which means that you are calculating the nominal profit after net nominal, that is the money, right? Now, when you look at it now, you will see that the NPV for every other project is given except project E, right? But the question says that we should determine the NPV, right? Now, let me quickly just brush it through the question so that we quickly solve it, then we'll move ahead, please. Now, the board of OAP Co has decided to limit investment funds to 10 million for the next year and is preparing its capital budgets. The company is considering 5 projects as follows. Project A, you can see project A investment. You can see the net present value. Then project E to be calculated. All 5 projects have a project life of 4 years. Project A, project B, project C, and D are divisible projects. Project B and D are mutually exclusive. All net present values are in nominal after-tax terms. Project E, the strategically important projects which the board of AOAP and Co have decided must be undertaken in order for the company to remain competitive. Regardless of the financial acceptability, information relating to the future cash flow of this project is as follows. You can see the information, right? Then what next? These forecasts are being taken account of selling price, right? Are being taken account of selling price inflation of 5%. So if your selling price will increase by 5% per year, it will start from year 1 per year. It will start from year 1, right? Now, if it is going to increase, that means that is the money cash flow. That is the money cash flow, right? When you're given this type of inflation, you can see another one is variable inflation of 6%. Your variable cost for the project E will increase by will increase 6% per year, right? And fixed cost, right? And fixed cost of inflation, 3 points this, right? You can say and fixed costs as well. The fixed costs are incremental fixed costs which are associated with the project, right? Now, at the end of the year, 4 years, machinery from the project will be sold with a value of what? 40, that is what? Terminal value or scrap value. Now, tax allowable depreciation. On the investment, cost of the project is available on project E, is available on a reducing balance method, which means that the initial cost of project E will be reduced, right? Will be what? Will be reduced, right? Now, right? Pay corporate tax of 28% per year, 1 year in arrears, which means that year 1 will be paid in year 2. A balancing charge or allowance is available at the end of the 4th year of operation. OAP Co has a nominal after-tax cost of capital of what? You can see the nominal cost of capital that was given because you are to convert that your cash flow to money. That is why you are given the nominal. If they want to do it, they can just give you real. Don't forget that you use real cash flow to real cost of capital. You use money cash flow to money cost of capital. Now the required now, we should do what? The nominal after-tax net present value of E and comment on the financial acceptability of this project. A. B. Calculate the maximum NPV which can be obtained from investing in the fund of 10 million, assuming that the nominal after-tax of project E is what? 0, which means that we assume that project B did not have any NPV, right? What will be the maximum net present value class? Discuss the reason why the board of OAP Co may have decided to limit investment fund for the next year. This is 25 marks, right? I didn't even know. It's 25 marks, right? So it's 25 marks, right? So suggested solution. Suggested solution. So we'll start with the NPV for the project A, right? Suggested solution. Now, let's start quickly. So you can see that we have volume, sales volume, right? We have the sales volume to be here, which is yes. So I can decide to copy this and have my sales volume. Okay. So if this is my sales volume class, are we still together? Hello?
Yes, sir.
Yes,
Okay.
sir. Yes, sir.
Okay. That's fine. Okay, now no sleep. Oh. Okay. So we assume that, okay, this is the units. Don't forget that the selling price will increase by 5%. So we increase the selling price for every year. So I want to see what will be the increase in the selling price. So you see that they will already be given, they say per year. The selling price will increase by what? Per year. So let's quickly increase the selling price per year. Okay. Now, increase by how many percent? By 5% per year, right? 5%. Coming out something. Why this thing? 5% per year. So, we can have 5% increase, right? 5% what? 5% in 5% increase. So you increase the sales by 5%, selling price by 5%. Now quickly class, let's get that. Okay, Oya now please, what is the figure? This is 5%.
Four
Increase
four
increase this
seven two point
450
five.
175.5.
forward.
75.
I have 472.5. Check.
Okay.
475.5. Someone give me 475.5. Next.
Now 472.5. Check it.
472.5.
472.5.
470.
472.5.
Okay, that's fine.
472.5.
That's fine. So let's move ahead to the next one, right? I don't know why this thing is jumping, but it's fine. Okay, I guess there's something that will make it to jump. Let me delete this. So, okay. What is this now? So, delete table. Okay. Selling price. Selling price. Right. In naira units. Okay. Increase by 5% per annum. Okay. 472.5. Now, what next? Give me figure for the next one.
498.75.
Forward.
98.75.
What did you increase? You increased this 475, have you?
Yes, sir.
Okay. You increase this 475, right?
Yes. 498.75.
Someone should also confirm that. 49 what?
8.75.
498. 498.75. Let's just have, let's just find it up. 0.75. Let's say this one is 9. Let's just have 3 so that we can move ahead. Please, someone should confirm this figure.
The
Next,
third one, 525.
So the first one,
525.
472.5 for the first year.
For the first year,
Hello,
what do
sir.
you have? What do you have for the first year?
Hello, sir.
I'm with you.
472.5.
I've
472.5.
approximated it. I've approximated it.
472.5.
We
Yes,
approximated
approximately.
it.
Okay,
Yes,
then
I've
I use
I've approximated it.
okay. If I inflate the 472.5, I got 496.125. Now, if you continue to inflate, the figure will vary. We are
Yes,
told to leave it at least
yes.
one decimal place.
No,
Yes,
no,
sir.
no. I didn't say so.
Mm.
I'm not the one that say you should leave it one decimal place. So I've never said so. Right? Please, you
No, I
can.
said I was taught before that at least one decimal place.
No, 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 no. Right? You can just leave it round up like this. You can
They say
just
it
leave
will
it
inflate
in.
the
You can leave it in. You can leave it in whole number like this,
okay,
right?
okay.
It doesn't matter. What is most important is
Yes, sir.
your presentation, and the way you do your workings, right? So if your presentation is you are good, you are good to go,
Okay.
right? So you can approximate. Exclusive.
Good evening, sir. Please, I have a question. This 5%, the 5%
So
inflation. Uh, I don't understand why we are using this 473. I don't think I
you don't
get it.
understand. You are just coming in now. You are just coming in. So since you are just coming in, just wait, just observe. So
Okay.
you understand. You are just coming in. Okay. Mm, thank you. So what next? What's the next? Quickly, class. Let's check. Let's check. What is the selling price?
598.5.
What is the sell?
5,
What is this? What
598.5.
598?
0.5. That's 599.
599.
Okay. 599. Good. 599. Right. So that is that. So if the selling price increases, now let's get what is the total sales? Let's get the total sales in value, right? Let's get the total sales in value, right?
I
Sales.
was
5,676 first year.
Okay.
hello, sir.
I'm with you. I'm with you, ma.
5
I'm with
million
you.
676.
Wait, I'm coming, Chimobi. I'm coming. I'm with you, ma. Madam Linda. Okay. Now let me ask question here. Before we move ahead. Chimobi, mute your mic, please.
Oh,
Let me ask question here. Now, how did you get 473? I need to understand something. So, how do you get 473? What do you do to get 473?
can I answer?
Okay,
Okay.
right.
From the question, we were told that their focus before taking account of selling price, inflation of 5% happened per year. So we increased each selling price by 5%.
Okay, okay. That is what gave you that figure. Who else again?
Those are
Okay, exclusive, yeah.
I'm thinking since it is 5% increase, I'm not supposed to do 0.95 for each of the selling price for this first year. So to remove that element of inflation,
I 0.9 what? Abba now.
450 over
Uh,
0.95.
no, it's not like that, sir. I, it's not like that, sir. The question says that is increase. Is that not so? It's increased per year. It will increase by what? 5% in the first year. In the second year, you already have this already. Is that not so? And it will increase by 5%. In the third year, it will increase by 5%. And in the fourth year, it will increase by how many percent? 5%. That is what the question says. Please, we should also always pay attention to question. All right? We follow question the way it is. Are we still together? Hello? Are we still together?
Yes, sir.
Okay, that's fine.
Yes,
So,
sir.
what is the figure for this? What is the sales? What is the sales?
5,676 or 5,676.
Just give me, Oga, please, just give me
5,676.
one figure, please.
One figure. Like,
Five,
so I don't know.
5 million what?
567.
676,000.
676,000.
Mm.
So next, what do you have?
6,487,000.
6,487,000. Next,
5,250,000.
5,250,000.
Five
Next,
million 90,000.
um, 5,290,000. Please, if you are confused, let me know so that we can come back again.
990. 990.
5,990,000.
Okay. Please, if you are confused, let me know so that we can come again, okay? Right. We have enough time. We have enough battery. We have enough everything tonight. And we must complete this question, right? So the next thing is variable cost, right? The next thing is to increase our variable cost per year, right? By 6%. Is that not so? So we go down and say variable costs. Variable costs. Madam Linda, are you still with us?
Yes, sir, but I'm separating mine. These workings for per unit because supposed to be in your workings. Then the total value, the one in total should be in the question.
Everything,
It will come.
ma, everything here is working, so it's
Okay,
working.
okay,
Mm,
okay,
thank you.
okay. No problem. Thank you, sir.
So, yeah, you're welcome. So increase by 6%. Right? By what? By 6%. So let's increase it by 6 what? By 6%. So class, let's quickly go back. What is the variable cost? You can screenshot it, so there's no need of us going down. You have it in your note already, in your material, right? So just screenshot so that we can move ahead, please. Screenshot 270, 280, and that. Okay. Please screenshot the, okay. What do you have? What do you have quickly? By 6%.
276.
Okay.
276.
Okay, 276. Right? 276. Next, what do you have? What do you have? Check, oh, they give you variable cost for each of the year. Oh, that is what you will increase. Oh. So what do you have quickly?
297.
2 what?
297. 297.
297. Next, what do we have? Quickly, please, quickly. So this is total.
Hello. Year 4 is 339.
Okay.
Year 4 339. 339.
339.
Year 4. I jumped to year 4 so that somebody will do year 3.
Okay. That's fine. That's fine. Okay. Year 3. Please don't forget that we're given the variable cost before you will be increasing that figure for me. You can see that we're given the variable cost. Just increase the variable cost by 6%.
Year 3 is 313.
Okay, 313.
313. Please, let someone confirm.
Okay,
That's the 313.
313. That's fine. Okay. So what is the total variable cost? I just want to pick it from here. Total variable cost, right? So we are still on capital rationing. We are trying to get our cost to get the MPV. From MPV, we'll do the maximum MPV for this question. Guess what? You don't know where Ican will set question. So that is why when you look at this question, you look at it that, oh, the first step is very simple, right? So what do we have?
Year 4 is 3,130,000. Year 4.
3 million,
Oh, sorry. I think that's year 3.
3 million.
130,000. Year 4 is 3. Okay, good.
Year 1, 3,312,000.
3 million.
Year 1, 312,000.
Year 4, 3,390,000.
3,390,000. Good. I like this. Next.
Year 2, 3,861,000.
3,861,000.
Please let someone confirm, please.
That's correct.
Okay.
Thank you.
Good. So fixed cost is increased as well, right? Because that is what we call incremental fixed cost. Don't forget that in a capital budget, when a fixed cost is an incremental fixed cost, you consider it as part of the cost of the project. Apportionment allocation does not exist, does not form part of the cost of the what? Part of the cost of the project, right? Victor.
Okay. Good evening. Good evening, sir.
Good evening.
My question is, I think by incorporating the inflation factor, the inflation is converting this cost to money cash flow sort of, is it?
Yes.
So the inflation factor, I thought it increases by the multiple of each year.
Yes. Interesting. I know. Okay. Okay, go ahead.
But why are we by that? Like year
Thank
4, power 4, or year 3 raised to power 3.
thank you. Thank you. You know, at when we started, how many marks they how many Ican they gave it how many marks? I think it's about 14 marks, right? If you don't know, you will think that the variable cost or the cost given to you, class. If you don't know, you will think that, oh, this is how many marks? 14 marks. They purposely do it like that because there is something there. Because it is for each of the years. I know. I saw it, right? I just wanted us to finish all these things. Then I will not take us back to that part again. That when they say you are given the inflation per year, right? Per year, when you want to determine the present value, you raise it power, you power it by the what? By the numbers of years, right? That is why they say it is increased per year. I think when you were given like 450 now, for instance, then you are not given maybe for 2, 3, and 4 years, right? You could say, oh, you increase it like that, one year, one year. Is that not so? Now, but in a situation like this will increase by 5% per year. We're supposed to raise to power that all those figures, right? Because it's supposed to be a cumulative figures. Class, are we together? Hello?
Yeah, we are.
Yes, sir. Yes.
Do we get? Please, we're supposed to we're supposed to raise this inflation rate by the numbers of years to get the cumulative. Do we get? To get the cumulative. But if you want to look it in another perspective, right? You could say that, oh, this is 450. The 450, 475 does not include the money term, does not include the inflation, right? From year one and to year two, it's supposed to be a cumulative. Class, I don't know if we are getting it. 450 is real. 475 is real. That 475 is supposed to be accumulated of year one and year two. That is why it will now becomes what? Money. Right? That is why it will now become what? Money. So in year one, the 450 will be raised to the power of 1. Right? In year two, will be 475 raised to the power of 2, so that it will be cumulative. Class, are we still together? Hello?
Yes,
Yes.
that's right. The formula we use here is 1 plus r raised to power n. So that for each year we can apply the year increment or the
Now,
power.
even aside that, class, I just want us to understand the difference between this money and real and how it works, right? Class, the real or the money inflation of last year, right? And this year money inflation is like a cumulative, right? Let's say the inflation rate. Oh, what should I use, self? Oh, okay, let's say um. Oh,
Sir, your voice is breaking.
oh, can you hear me now?
Yes.
Hello, can you hear me?
Yes.
We can hear you,
Oh,
sir.
Yes,
okay,
sir.
okay, 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 okay,
I
okay.
can hear
That's
you.
fine. That's fine. So it's supposed to be accumulated. Now, the 450 is in real term without inflation. Now, when you get in year two, the 475 is in real term without, so it's supposed to be like a cumulative. That year two is raised to power of 2, so that you know that, oh, year one and year two is inclusive of that inflation. That is how it's supposed to be, right? So what we will do, let's quickly go back, right? This is correct, right? This is correct. So let me quickly bring that out, right? Um, coming. So this is supposed to be. Let me put it here. Coming. That is why that question is 14 marks. The year two, right? Year two. Yeah, it should be equals to 475, right? Times 1 divided by the open bracket 1 plus what is the inflation rate, class? 5%, right? 0.05, right? Close the bracket and raised to power 2 for year two. Class, are we still together? Please, if you do not understand, let me know. Are we still together? What do you have?
So
What do you
I
have?
don't understand though.
Okay.
Say I don't
Who is that?
understand though.
Who is that? Rachel. Okay, okay.
I have
What do you have?
3.
Hello,
Five
sir.
What
two
do you
three
have?
point six eight.
What do you have?
523.8.
Five
Five two
two.
three point six eight seven
Okay,
five.
0.68, right?
Two
0.68.
three
We can.
point four.
Okay,
Yes.
okay, we can say it is
Mm.
5234. All right, we can say 5234. Okay, that's fine. Class, let me quickly come back again. You want to engage in a project, hmm, that is for 4 years. When you want to engage in these projects, you have to consider inflation. Then let's say Rachel wants to embark on a project, and it will be for 2 months, right? Within these 2 months, let's say there will be inflation of 2%, right? As cost, right? Now, you as a financial manager, you will look at it that month one, there is inflation, right? You raise it to power of that month because of it is for 1 month. Month two, it will be a cumulative of month one and month two. Is that not so? It will be a cumulative of what? For month one and what? And month two. That is what form month two. When you want to calculate for month three, it will be raised to power of 3, which will be a cumulative for each of the year, right? So as the year is increasing or as the month increasing, it becomes a cumulative, class. But in a situation whereby this case is actually different, right? In a situation whereby you are given maybe just only one selling price, is that not so? But you can see you are given just one selling price. Let me show. I'm coming. It seems come. Just a minute. Now you are given just one selling price, right? One selling price of 15 naira. You now increase that selling price by 5% in the first year. Let's say it give you 750. Now, you now increase that selling price by 5% again. Is it not cumulative? From what? From year one to year two. But you can see that it is cumulative. But in this question, now, they already give you the numbers of the selling price, but they want you to do it cumulatively, right? So how will that work? Is for you to say, oh, this is for year one. Raised to power of that year, we give you for that year. Year two will be raised to power of 2. Class, are we still together? Hello?
Yes, sir.
Yes.
Rachel, do you get that?
Yes, sir. I've gotten it, sir.
Okay, okay. Can we move? We can move now. Okay, okay. Thank you. So now we move back to this part, right? So thank you, Mr. Victor. This is 5, 2, 3. Let's say 5, 2, 4, right? So the next year again. So what is the next year? You raise it to power of 3 so that it will become cumulative. Madam Linda, are you still with us?
Yes, sir.
Okay. You can see I've given
Sorry.
two different scenarios, right? Two different scenarios, right? So year 3, you can see what is the selling price for year 3 is 500, right? 500, right? So we can have 500 times this raised to power of 3 to become cumulative, right? Raised to power of
579.
what? 3.
Mm.
Raised to power of 3, right? Please, I just want us to understand that part. Please, it's very what is very important. That is why it is 14 marks, because they knew that people will just raise his power and just leave it like that, right? What do you have? Sorry, figure
579.
579. Thank you.
579.
579. Okay, 79. So why I didn't bother for year 1 is because it is just for 1 year. Just raise it to power of 1. You still get the same thing. Is that not so? If you raise it to power of 1, are you going to get the same thing? No. Let's check. Year 1. Year 1 is what? What is that year 1, sir? What is the figure for year 1? 450, right? 450. 450 times 1. Yeah, you have the same. You actually have the same thing. It's supposed to be the same thing. So raised to power of 1. What do you have for year 1? Then year 4. This. I didn't mean it is just one selling price we were given. Like this one now, class. Like this one now, you will just say, oh, you will just accumulate it. Is that not so? You will just accumulate it. But no, this question is not like that. Now, for you to get the accumulation, you need to raise it to power of that year, because you were given the variable cost or the selling price for the what, for the numbers of years, right? Yes, the question is in the material. So what do we have, class? What do we have for this? What do we have for year 1?
The same thing, 473.
Okay, 473. Yes, I know you should have the same thing. 473, because it's just 1, right? So the last one, year 4, right? Selling price is 570. I will only do the selling price, so you will complete the workings on this part, right? 560 or 570? Confirm. Is it 560 or 570, class? Raised to power of 4.
570.
Thank you. What do you have?
The answer
Before
is
the end of this, what do you
693.
have?
693.
Okay, 693. Before the end of this class, I will still explain it again. The question, I will still explain this part again so you get it, okay? Don't worry. You get it. Right? Just trust me, you will get it. 524, right? So 579, and this is what? 693. So apologies for okay. Now what do we have here? Quickly. So what do we have here? So the variable cost will still change, right? So the variable cost, the first year will still remain the same, right? So please, class, what do you have for year 2? Just screenshot this thing. Just screenshot it. You can see the variable cost 260. We already know the for the year 1, 280, 295, and 3 what? And 320. Class, are we still together? And what? And 320. That is why the question is what? 14 marks. Because they knew that student will just multiply it, right? Emmanuel.
Yeah, good evening, sir. For that year
Okay.
one, for this variable course, this 473, I don't know how you go there because I'm not getting 473.
Get it now. 473 selling price.
Yeah, I mean
One
for the yeah,
divided by
that's selling
one
price.
one divided by this raised to power 1 times 4450. You didn't get 473.
No, I'm getting 428.
Okay. Another person should confirm that. What do you have?
Yes, it's 428.5.
4
It's 428. 428.5.
No, no, no.
428.
You have to do 450 into bracket 1.05 raised to power 1.
Huh.
No, it's not 1 divided by
Interesting.
1.05 raised to power 1 is 1.05. You not say 1 divided by 1.05. Then whatever you get, you multiply it by 150.
By
No,
450.
the inflation is by 5%.
5%.
So 5% means 105 over 100. Then you're
Yes.
having 1.05 raised to power 1 is still the same thing times 450. You
Sure,
have
you
47 point something, which is around
It's
round up.
470. It's
You have
470.
round up.
Ah,
Interesting. Okay. Hmm.
Sir, my
You
own
must get.
question is what we calculated initially. Sir, my question
I'm
is
with
what we
you.
calculated initially. Is it wrong?
Yes, he's wrong. He's wrong. I knew. When I was, I knew that it was wrong, actually. Yes. Do you know why? I've explained that. Do you know why it's wrong? Wait till the end of this class. I've explained before. I will still explain again. Okay. Are you getting the 473 now? Did you get it now?
No, sir,
Did
I
you
didn't
get?
get it, sir.
I'm not
No,
getting it.
no.
Interesting. Okay, I'm coming. Olanike.
Correct. It's correct from my own calculation. Is
Good evening, sir.
Good evening.
Sorry, I came late to the class today. I think this 1 divided by 1.05 raised to power 1 would deflate the value. If you have a calculator with you, sir, you can try it. So the
I'm
1 over should not be there.
interesting. I
yes.
have I just calculated it now. I have 472.5.
1 over is deflating here. I
Yes.
don't know.
She's right. But I think it's
It's right. It's right.
right.
Just normal inflation.
Express it by the
Hello, can you hear me? Let me answer her. Hello, can you hear me?
Go ahead, please.
If you want to do it this way, you have to put
Hello,
minus 1.
exclusive. Wait,
Hmm?
please. Wait. Madam Linda.
Yes, sir. I told her that this is a normal inflation. When you are calculating this increment or decrement, what we use is 1 plus r raised to power n. The one you're talking about is 1 plus r raised to power minus n, which is DCF, down, towards the end. Before you get your present value, that is the one we use. This one is for normal inflation. It's just one. This is present value. 1 plus r raised to power number of years. Finish.
Yes. Can I add to her voice, sir?
Please go ahead.
Okay, I think she's right because, and that is the basis upon which we calculated all these values. Is we are raising it to 1 plus 0.05 raised to power the power of the year multiply by 450 without this 1 over. So what I mean is 450 multiplied by 1 plus 0.05 raised to power
Raised to
1.
power.
But the inflection factor by now.
Yeah.
What we did to calculate all this, maybe the way you put the figure is what is confusing some of them.
Okay, that's fine. Thank you, everyone. Exclusive.
Okay. This thing is the inflation rate is discount factor. I think is so. If we are going to use this formula that I said, that means you have to for each of those raising, you have to put minus so to recognize the division. But if not, you have to do the normal one plus the rate raised to power the number of years. So, but for this one used now, that means you have to add minus before you raise it to the n.
Okay, I'm coming.
If you add minus, it becomes DCF. This is a normal inflation.
I'm
Mm.
coming.
It's the same thing now, inflation.
If it's going to be the normal inflation, that means that one
Don't give you
over
the
will not
same
be there.
figure.
Thank you, everyone. I
It will
absolutely get it.
actually, if you do this,
Yeah.
if you
Thank
do
you,
like this.
thank you.
Yeah, that's correct this way.
Okay. So now, are we good now?
Yes, sir.
Yes,
Yes, sir.
Okay, thank you so much, everyone, for your contribution. Is well appreciated, right? Nobody is perfect, right? We learn in the process as well, right? So I made that mistake, right? So I took the responsibility of that. My sincere apologies, right? So let's move on, please. Let's move on. Thank you. So now, if you have something like this, you have 473, 524, 579, and 69 what? 693. Now, next one is the variable cost. So the same thing, right? So increase the variable cost. So I don't need to write the variable cost now. So do that one. Give me answer sharply. Raise power it by 1. Are we still together? This is it. So this is the variable cost class. Right? This is the what? This is the variable cost. Is that not so? And it will increase by what? 6%. It will increase by how many percent, class? By 6%. Right? So quickly. So the first year will be 4276. What do we have for the second year? Quickly. What do we have for the second year? Quickly.
315.
315. Next.
351.
Okay. 351. Next.
404.
Okay, please multiply this. What do you have? Quickly. By the units. What do you have? Quickly. Oh. Please, someone else should do year 2, year 3, year 4 now so that we can leave here, please. Hello?
Hi, sir. Are we doing sales or variable cost?
It's variable
I'm
cost
lost.
now.
Yes, sir.
276 times 12,000 naira, 12,000 units. 315.
3312.
Okay, I'm coming. 3312.
12000. Yes.
Year 4. 4040. 4040 000.
Year 2, 4,095,000.
Okay. Year 3.
So this year,
095.
You
95.
say?
that
095, not 1.
a different thing. Hello, sir.
Year 4 is not complete. Year 4 is not complete.
It's okay. Hello. It's okay. Please mute your mic. Everybody should mute their mic. Please. Thank you. Okay, thank you. Um Oluwapemisire.
Yes.
So please give me a figure.
Year 4, 4040.
4040, okay?
Yeah. Yes.
Okay.
It means 4 million. Yeah, 40,000.
Okay, 4,040,000. Okay. Okay, year 3.
No, I didn't calculate for year 3.
Okay, please, someone should calculate year 3. What do you have?
The thing is
Year 3, 3,510,000.
3 what?
3,510,000.
510. Okay.
Yes, correct.
Year 2, 4,095,000. Is it? I don't know. I don't know if I'm right. I'm getting 95. I'm seeing 90.
Oh, okay. Oh, please, someone else to confirm is it 95,000 or 091?
I got
Which one of them?
95.
It's
For
It's
95,000.
95,000.
Okay. That's fine. So let me quickly create another link so that we can join. Thank you.